10-minute pre-stream vibe check. Let's see if anyone out there can hear me. I've got a few in the YouTube chat here, and then a couple of you guys in the other stream over there. Let me know if you can hear me, and that would be great, and then we'll get started in a little less than 10 minutes. Okay, a little less than a minute before we get rolling here. Let's get the music under control. Bring this down. All right. So we're going to get started here in just a moment. And let's get this over here. We're going to jump right into some of the low-term time frame analysis after the intro here. How you doing, guys? We're going to get rolling here in just a moment. Hello and welcome to Market Madness Technical Analysis here on Landy's Crypto Corner. Today is Wednesday, September 6th, 2023. And we're going to go ahead and jump into some low-term time frame analysis here on Bitcoin. And I'd like to say hello to you that are in the live stream chats right now. There is a few going on. I've got a couple more going today than I usually do. We've got some on YouTube, got some over on a test Discord server. I'll be talking to you guys about that in a little bit. And then we've got you guys over there at the shop. So hello to everybody. If you're watching this after the fact, hello. We're going to start out with following up on some swing fail pattern volume analysis. And to do that, we had marked out the 15-minute chart over the past few live streams. And this has been a good guide to, kind of determining the range as well as continuation to the downside and or in this case, areas to the upside that are very likely to get rejected, at least at first pass. So in this case, we had already marked out some of the candles on the way down that were continuation and then a bit of a short-term bounce consolidation to the actual low. And now we've got arguably the biggest spot volume candle here on this green candle off the low. So let's go ahead and get the swing fail horizontals up here. In addition to that zone just below. And we'll break this down right at the beginning and then we'll get into some of the more long form analysis. So just to recap, these were continuation candles down, higher volume candles. Close is the yellow line. The white is the wicks. And we can see that I have alerted these as well. They shouldn't pop up. I do have them paused right now, but you can see after breaking and closing below, this candle didn't actually, this guy right here didn't really close below by much after it got a nice bounce, reclaimed, went and tested the top side, came down, tried to hold this this close open here, and then fell through the wick low, lost that, created a new low, so on and so forth. And then you can see how these areas have acted as resistance on the way back up. Now, in the most recent move, that was a little bit earlier, the move off the low was a little more than an hour ago. What we saw was this area, which is the white lines again are going to be wick lows on high volume. And we saw this area swung on this candle here. We had a nice green candle there. It was some of the higher volume that we had seen since consolidating between this close and this wick. And this area was holding up when it was lost. Bitcoin came down, found some volume here, tried to set a low, bounced up and tested around the top side of that wick and then lost it in the next candle, came down to the actual close open on the 15-minute of the current move down. So this was coming in at 25,371 with the wick low at 25,307. We saw that price dipped in there, found some good liquidity, and bounced pretty hard all the way up to a high of $26,025. And we'll get to this in a moment, but this is a weekly close, and this is our main overhead resistance from the Bitcoin in 60 seconds videos, and found an even higher volume candle, and I believe this is going to be the highest volume candle of the range, or thereabout. Yeah, it is actually. So pretty high volume rejection there. And I wanted to cover open interest as it relates to this, because in one of the chats with you guys, I was looking at open interest earlier today and saying that this is likely going to be shorts. And if it is shorts, they're probably going to get squeezed. If it is longs, it's probably going to fall down. So what we did see here was a small short squeeze, and now Bitcoin's kind of trading at equilibrium in terms of OI. So let's get the OI chart up here, and this is the hourly. We could go down to the 15-minute. I don't think that's as relevant right now. I think the hourly will work just fine for us, but I had noted earlier in a bit of a private discussion that there was this downtrend here on the hourly, and that we saw an uptrend on open interest here. So one of two things was going to happen. Either this is going to act like a previous time that we had seen this happen, where we had uptrending open interest but lower highs, right? So higher lows on open interest, higher highs. And this was going to be back here prior to the move down to the area that we are currently trading in now. And this is where we saw a slew of lower highs on the hourly here. And we saw a slew of, higher lows on open interest. And what happened in this case, it was a long squeeze. And the longs got squeezed to the downside. In fact, this peaked out at just under 11 billion on open interest. And generally speaking, when we go back to something like a daily on open interest, 11 to 12 billion kind of been where Bitcoin has been topping out. So in this case, we can go to the daily and just do a sanity check real quick. Yeah, so it's been about, it's actually, wicks have been up around 11.2 billion. The lows of the range that Bitcoin just fell out of most recently was around 9.2 billion. So about a $2 billion range up there. Wipe out $2 billion worth of OI and more. This last spike up was around 10.63 billion. And now we've been bottoming out around 7.5, a little under 7.5 billion. So the look is a bit different than it was on the highs when it comes to the uptrending OI. This was likely to be a bit of a short squeeze based on a few different technical indicators as well, at least in the short term. That doesn't mean that things won't break down, by the way. So let's go ahead and get this back up here. And we can see that if we were to kind of snap a line of where Bitcoin is currently trading, it's right on the lows, and open interest is right around, 25,800, and on the low side here, it was at 25. It's about where price was trading. So there's about a, let's see, there's 7.41 billion versus 7.62 billion. So about 200 million in open interest still on the board there. We'll see if this continues to tick down. Now, if open interest does continue to tick down and hit these lows, and we see this recover and start pushing up, and open interest kind of settles in around this area and then starts to curl up as Bitcoin is breaking some of these highs on a close, which to be fair, it did get a trend break on the hourly. So if we go back to our normal chart here, flip this over to the hourly chart, you can see that this was the last closing. It was a higher high on a close, still remaining in this wick low here, right into this close and this wick, this close and wick high volume area over here. So that is from the 15-minute again. So this is a setup for a possible move up. It could also dump right back down. Now, the main thing to understand here is since we've gotten into this range with Bitcoin, a whole lot of nothing's really happened. So the relevant areas to break now are going to be, this wick low over here. So if we see this wick low at the close open around 25,370 or so get dropped, then we're looking out for 25.3. If this gets broken, we're looking for continuation down to the blue box area. Well, it's kind of a gold box area around 25,200 to around 24,750, which is the prior daily low. If that area breaks down, then I do think that Bitcoin's headed for the next weekly. So let's get into the traditional analysis here, and I'll pull the Bitcoin in 60 seconds chart over. I will note that the weekly just got ran on that move up. Let's go to the daily though. This is going to be a little bit more interesting. All right, so I made a mistake last live stream, and I kept saying down here $26,000 when this is $25,000. So my apologies. I think I did correct that as the stream went on. A little bit of a brain fart there, but Bitcoin on a close back above the weekly here would start to look good to at least go test the highs here around 26.1 to the close open at around 26.4 to 5. And above there, then we start targeting the upper first around this weekly at 26.7 to 26.750. If it can push above there, the upper second is going to be around that monthly, and I'd give it some room around 27 to 27.2. If it can push through there, I do think it's initially capped around 27.5, and then we can start targeting the close open up here around 27.7 to 8, and possibly that weekly again at 28K, maybe even 28.4 to 5 if it does start to get expansion. Now to the downside, if we do see these wick lows dropped, I think that Bitcoin is likely headed right into this blue box territory around the lower second at 25.2 to 24,750 to 800. If it does break down from there, then we're targeting the weekly, or at least I'm targeting the weekly at 24.3 to 5. Give it some room, psychological number around that 24.5. And then below there, the next weekly at 23,750 or 23.7 if you'd like to 24K. And the line in the sand, of course, is going to be 23.3. And I've said this many, many times. If that area is dropped, Bitcoin's likely headed for the very low $20,000 region, maybe even $20,000 even. If it gets under there, well, then it's going to be a major low retest on the higher term timeframes. And if that breaks down, then a lot of those bears calling for 12K are probably going to get their wish. They might not want to wish to long it for a while because it's probably going to sit down there if it did. That's not my first take on things though. Right now, Bitcoin does have a very high potential actually to bounce out of here if it does put in a low on the daily. And we can go ahead and go back to the normal chart here instead of the Bitcoin in 60 seconds chart. We can get rid of volume. We can turn on, I should say we should turn off the swing fail areas here first. And we'll turn on the Bollinger Bands. So we can see that as it stands right now, if it does set a low here, where does it have to go test? We'll turn on the Bollinger Bands in just a moment. It's got to go beat out this wick high on a close at 28,184 to 185. Some places, I believe the wick went to like 28,200 or more. If Bitcoin can close above there, that would be a trend break, so downtrend break. And then I'd be looking for a possible move back up to around $29,000, possibly a test of 30,000 to 30,300, which on this chart here, 30,000 to 30,300 up here is a weekly resistance area overhead. So now the potential for Bitcoin is going to come on any kind of a closure that sets a low and then also begins to turn stoke momentum. So as it stands right now, 25,830 is the number to beat. Stoke is still pointed to the downside here on the daily. And as we go up the time frames here, I want you to note where the pivots are, because if we do start seeing the daily close above there and we start to see some of those lower term time frames below the daily maintain trend and structure, then we look to the 2-day, because the 2-day is just above there at 26K. If you're bearish, you're saying today's test of $26,000 was a rejection of the 2-day momentum pivot. Sure, maybe. But the 3-day is also pivoted now at 25,855. So we've got the daily and the 3-day pivoted very close to each other. And then just above that is the 2-day pivot at around $26,000. So 25,800 to 26K. We start seeing that area break above in terms of price action, and then we see closures above, then I would be looking for, at minimum, a move up to retest this local high. Whether it's on a close around 27.2 to the wick highs there at that weekly at 28K, and that would be this guy here, this weekly box at 28 to 28.4 to 5. That area is very likely to get retested. That does not mean that it's a given that it's going to trend break, but if we do see those momentum pivots begin to turn, that is where I would be looking on the high side of things, and then gauging if we do see closures above there for further upside. Now the big ones that I want to note here. So we've got the daily closing, of course, it closes every day. I don't know why I went back to the daily. I just misclicked. The 2-day is going to be closing in 2 days. So this is a new 2-day candle. It's got another 2 days to hold this area and try and work its way above that momentum pivot at around that $26,000 if it can. We can also see, and I do want to note this, that BBWP is in a cool down phase now. And we'll look at this when the Bollinger Bands are turned back on. But the 3-day is going to be closing with today's daily. So if we did see a 3-day close above 25,855, which it's not above there just yet, it did test that area. If it's below this pivot, it's likely going to move a little bit lower. This might even adjust to around 26K. Then that's still going to be the area. So I would say 26K is probably the number to beat. We can see that the 4-day momentum pivot is also at 25,850. So we've got the daily, the 3-day, and the 4-day all in the same area. And the 5-day coming up here, I believe, is still quite a bit above there. It's at 29.6. And this 5-day is going to close with the next 2-day closure. So we've got a 3-day closure today. We'll have the 2-day, 5-day closing on Friday. So we'll follow up with where things are on Friday during that stream, as it will close later in the day. But basically some things to look for coming into that close. And we had already gone over the higher term timeframes, I believe, on Monday, where we had this week we have a weekly, of course, a 2-week, 3-week, and 4-week. So it's a big closing week for Bitcoin, coming into some pretty major options adjustments and expirations in the second week and end of the second week here for traditional markets. So keep that in mind. If Bitcoin can hold up here, I would actually be favoring the upside. And OI is kind of painting that picture, so I would keep a close eye on it as well. This was a pretty nice little washout of bottom shorts. As Bitcoin was going down, OI was rising, wiped them out, and then kind of range around a little bit before deciding direction. Just because shorts got squeezed a little bit doesn't necessarily mean that Bitcoin is going to, put on its rocket boots. It's still, we still have to see some good structure develop here. Let's go ahead and turn on the Bollinger Bands here on the daily. So kind of already made note of this when looking at the Bitcoin in 60 seconds chart for the daily at least. Lower first is 25,675 right now. Lower second is right in that area at 25.2. Lower third is on the bottom end of that, around that 24.7 to 24.750. And of course, this is the lows, and that's the low wick there at 24.750. So Bitcoin, you want to see if Bitcoin does get there, and you want to look at this as a possible deviation, as a bullish scenario. You'd want to see this just swept and then close back above, and then put in a low and march on. It still would be a downtrend until this last high is taken out, though. All right, and then if that does fall apart, favoring probably some bigger downside on longer term time frames, even if we do see bounces on any closes below this wick low at 24.750. So that's where I would start favoring over the next couple of weeks a move down to the low $20,000 region. The 2-day is painting the picture of any possible move down to that lower second being an area of interest. So at 24,300, which just so happens to be a weekly close, that's going to be big. So if we did see this this box lost there and this wick low at 24,750, it's highly likely that we see a run down to the lower second, maybe even through it. But if we see a closure above it and then a regain of this 24,750, then I'd be favoring a nice bounce, at least back to wherever the upper first is all the way up here. This would be the lower first, which is currently at 25.9 and has been holding price down. If we did see closures above there, I'm favoring a move back to this high. Again, basis is coming right in there at 27.5, so we have confluence there. If we did see expansion below the lower second at 24,300, that's where the 23,750 to 24K and then 23.3 at the monthly, probably 23.5 you could take as well. That would be really cutting it close for the bulls there. They'd probably want to avoid that. If they can't, it's going to be a fun ride and probably a much longer form consolidation during this transitionary period. I'm still looking at this on the longer term timeframes as a transitionary period. So what is the 3-day telling us with bull bands? The 3-day is telling us that, the lower second is right there at this wick low at around that 24,750. This will update and likely tick down to be around where the 2-day currently is at around 24.3 to 24.5, maybe even $24,000. As this, I do favor moves through and then a stab back at the lower second. If it gets bought back in, that's a good signal that at least in the short term, it could show some strength to recover and possibly push above if it was a deviation, especially because this is a 3-day time frame. If we saw the daily stab down there and then rise back up, probably a good at least scalp opportunity, not financial advice, of course. And then we reevaluate from there. Being so close to the edge of turning stoke momentum to the upside, though, I will tell you, I want to see a full turn, and that would be 2 closures. So on each time frame, when you see stoke turn, you'll see the K over the D often, and you want to see the K and the D both pointed either in the upside direction for pressure up or the downside direction for pressure down. That still does not rule out moves back down around whatever low was put in, but would start to favor a move, in this case, to the upside. But it's not confirmed. This would be at minimum 6 days to confirm. So Bitcoin closes above, we'll call it 29,860 today, or 25,860 or 25,9 is what I meant to say, then likely we see a cross maintained, and then we wait for the next closure to see if we get that extra crossover. The 2-day won't even have a chance. So at least 4 days minimum. If it was going to cross back up, we need to see a closure above 26K on the 2-day chart, which would be Friday. And then by Sunday, we would need to see the D read closed above as well and pointed up, which means you need 2 closures above that momentum pivot for confirmation. And the 2-day, is showing BBWP decreasing with moving average pointed down. And this kind of a setup for me does favor still the bearish scenario of moving down to the lower second, but because BBWP is cooling down, it's more likely to bounce than not. And or it continues to cool down, regains the lower first, and then tries up. When looking at the 4-day, it's not the same picture. So 4-day is still getting expansion to the downside. Now 4-day is going to be closing with Saturday's candle. So, right? Yeah, this will close with Saturday's candle. So this will close over the weekend. And the important thing to watch wouldn't necessarily be BBWP, although the cross would be an early indication that some of the lower term timeframes are probably going to start turning soon. And the 5-day is going to be a really big one this Friday, as I do think that the momentum pivot on the next closure, if Bitcoin can hold, will move down considerably. So from 29.6, probably somewhere around the 29K, mid $28,000 area, or even lower. We saw the 4-day drop from that area. On the previous closure, it was sitting like right around 29.2, and it dropped all the way down to 25,850 right now. So that will be something to watch. And you can see that although the 2-day is showing some signs of cool down on BBWP volatility, the 3-day is not yet. So again, the daily, 2-day, you got to keep a very close eye on it. And when looking at the daily is still expanding, of course, to the downside. And in this case, the reason why we're seeing expansion to the downside is because we saw initial aggressive contraction and then re-expansion down to the lower first. And if we start closing outside of that lower second, we're going to see we're going to see the areas of the lower second on the 2-day, 3-day, 4-day likely get tested. So that would beget expansion to the downside, which would beget, a little bit of a different look on the 2-day, but it would be continuation of expansion on the 4-day, 5-day, and even the 3-day. So, yep, that's kind of where I've got what I've got for you, and where I'm looking. Man, I'm really messing up sentence structure and all kinds of stuff today. All right, so that's going to be it for Bitcoin for right now. We'll follow up with the higher term timeframes coming into the weekend. We'll take a look at some of these closures as they come in as well, and go from there. The next big thing that I wanted to call out, and I showed this to a couple buddies of mine, and apparently they told me Crown went over this recently, and I have not seen it. I gotta catch up with what he's been talking about. But there is a bit of interest, or there is something very interesting here regarding USDT. Now, USDT's market cap is around, I think it's like 86 billion. We'll do this, yeah. So it's 83 billion right now. And then we've got USDT dominance, and the USDT dominance chart will be the one in teal here, and then market cap for USDT is the orange line there. And let's go ahead and put this on a line chart for Bitcoin, which is going to be blue. Now, one of the reasons why I'm bringing this up is I keep hearing from a lot of what I'll call them fiat shills, but technically they're not even fiat shills because they just shill altcoins most of the time, even though they're all in favor, even though they call like Tether a scam, then they start shilling altcoins, which is crazy to me. Um, and one of the big things that they always point out is like, look, it's because of USDT that Bitcoin has pumped so much. Well, okay. It's an 86 or 83 $1 billion market cap, and I think it's over 100 if you were to add USDT and USDC together. But one of the big things that people fail to understand is USDT and USDC, for that matter, both run on Ethereum's network, right? There are other chains that you can swap those stables on, but primarily built on Ethereum. And when you look at the market cap continued to rise up to around this 83 billion back after the double top, right? So you had you had money flowing out from Bitcoin. We saw money flowing into USDT. USDT and Bitcoin both go on a run in terms of market cap as money comes back into the markets after the Wyckoff reaccumulation hits the spring and then gets the new all-time high. And then we see as Bitcoin was headed down, USDT heads down as well. Of course, this was all of the 3AC, Luna stuff, all that different stuff, bear market stuff. Doesn't really matter what the narrative is. Comes down, and then it stabilizes around 65 billion. And now it is at new higher highs up here at 83 billion. And Bitcoin has not made significantly new highs, right? So this is literally at where the all-time high was in terms of where USDT was. What does that mean? Derivatives off the lows didn't start coming into the market aggressively off of Bitcoin's lows until spot started picking up. And while USDT and USDC can be an indicator of direction, especially when looking at open interest, it's usually the bait that either gets spot back in or to sell. And Bitcoin is a spot-driven market, which is why I concentrate on the Coinbase chart. Look, when you have a big player like CME, and what do you think their contracts are traded in? Their contracts aren't traded in stable coins. It's traded in US dollars, okay? And that is where you have one of the largest derivatives players in the market right now. And when we see an ETF eventually, whenever that is, it doesn't matter when it is, because at some point there will be a Bitcoin spot ETF. They aren't going to be trading that ETF out for stables. They might use stables to acquire the Bitcoin and then put it into, many of these spot ETFs are utilizing Coinbase as the custodian. And in this case, if they're using Coinbase Cold Storage as a custodian, we might see bumps in the different stables that then go and flow into Bitcoin to fill what is called the creation unit size that they need for the ETF. So ETFs work on a creation and redemption process. And what people need to, excuse my cough there, people need to understand that the creation redemption process is where the money's made. It's made in the arbitrage between the two and the management fees for the ETF. And then an ETF is much more powerful in terms of leverage than the Bitcoin itself in the lending world. Who really wants to, outside of, the ones that got wiped out in this last bull run to bear market, who were locking up their ETF, or not locking up their ETF, locking up their Bitcoin for to borrow against, basically, and take loans out against to try and buy altcoins in many cases, or free up liquidity. that's not the smart way to do it, because you're literally giving up the volatile asset to do it. If you're going to do it, you do it on the ETF market, because you can take out loans against the ETFs. So, and ETFs basically in a roundabout way can be rehypothecated. So when ETFs eventually do come on the market, you're going to see a lot of bigger players put it on the books, because they don't have to worry about the Bitcoin. They don't have to worry about the underlying asset, because they're trading and borrowing against the ETF that they're holding. So just, kind of understand that that's where things are likely headed in the future. No one can tell you when that's going to happen. I know that even before Bitcoin had the little pop up here on the hourly, we saw this is still, that's not going to show us the candles here, but Bitcoin had this little pop up on the hourly. It's because the Ethereum ARK filed for an Ethereum ETF. No, it's not. This thing started like at least an hour before any of that news even hit. And a lot of it was based on the OI buildup on the lows. When the lows were swept and they didn't break, Bitcoin reversed and took out those potential breakdown shorts. And now it's right back to where it was. So now the other thing that I want to call out here is the stablecoin dominance. So we'll get rid of the market cap here for USDT, and you'll see that when dominance goes down, Bitcoin's price typically goes up. When dominance begins to reverse and rise, Bitcoin goes down. Dominance is now hitting a pretty important level. It's not quite there yet. It's at 8.18% for stablecoin dominance. We can go to the USDT chart, because it's going to have a general inverse correlation with most crypto in the space. So in this case, we can go to USDT dominance, and we can look at what the momentum pivots are, and we can do a little bit of charting. This would be a lower high if it does put in a high here. It did put in a high back here. If it doesn't get past this wick high at around 8.37%, then we're likely looking at this chopping around and then probably headed down. So in this case, a high is put in below today's wick low. Today's wick low is at 8.06%, and the momentum pivot's going to be 8.10% on the daily. So it's still pressure up in terms of USDT dominance. And is it in an important area for a reversal like Bitcoin? We should just see it on the other side, right? And it should look the same for just about any coin in the space, as this is going to kick off, if it starts to head down, this is kicking off a bit of most likely a move up for most cryptos, and then the spot buying begins, and then we see the little liquidity grabs here and there. So in this case, it does look toppy to me, but it's right up against that upper second, pushing that upper first rather. Upper second and third is where the high is currently coming in. So if it does reverse from here, it's got to close. I mean, technically on a close, it's just got to get a closure below today's open, which is yesterday's close. So today's open was at 8.15. That'd be an early indication of a technical high, but until that wick low is taken out at about 8.06%, it's not a high. Just like when we get to Dixie, I'll point out what I was going over with Dixie, looking like it wanted to paint a double top on the daily, but it was not in and not confirmed. And if it broke out to the upside, it was going to break through that local high structure resistance. And it did. In this case, could see the same type of thing with something like dominance here on USDT. Now the 2-day, again, it could do the same as like Bitcoin on the lows. It can go and run that upper second in this case. And if it closes back below 8.37, then, it's likely going to put in at least a local high for a little bit. 8.06% is going to be the 2-day momentum pivot. Daily was at 8.1. What's the 3-day at? 8.16. 4-day is 8.14. 5-day is 7.2. So it's pressure up on the 5-day. 4-day, 3-day are getting very close. 2-day and daily are also within range. So, I mean, the wick literally, right around those momentum pivots for dominance here on USDT. In this case, that tells me that if this doesn't get moving to the upside, and on the other side of that, if Bitcoin doesn't get moving to the downside, in this case, if this doesn't get moving to the upside more aggressively and on a close, then it's more likely to test back down, probably put in a local high, and then test back down a little bit further. And realistically, as long as it's above 7.68%, or even this last wick low at 7.44% or so, this is going to be 7.59. I think because I have this on there in that chart, that's messing me up a little bit. 7.69, nice. If it is, that's not the right one. It's 7.59. So as long as it's above there, it's still dangerous for the market in general, because it would still be a generalized uptrend. So, and in this case, yes, the highs are all the way up here at 8.5 right now, at least the current highs. And this is going back to the prior rundown to Bitcoin, where Bitcoin was trading around that low of 24,750. So something to keep an eye on. Essentially what it boils down to is if Bitcoin can hold the lows here, then it's likely to try up pretty soon. At least hold the lows for throughout this week, into next week, then it's likely to try up. And even this week into next week, it might try up and fail, especially if it's coming into options expiration and we do see a bigger move down in traditional markets, then we're likely to see, any kind of rally get stifled. And or just hangs out, goes sideways, and then gets continuation down. That's the other scenario. But if it does get back above that wick high, watch out. That's a trend break and likely going to go test this range above. All right, so let's go look at traditional markets, seeing as I've spent so much time talking about this other stuff. Let's check on Dow. Dow has put in the lower high. We talked a little bit about this. I mean, it was not even strong enough to gap fill up here. So in this case, downside I do think is limited until we see this last wick low dropped, and this last wick low is that $34,030. And right now getting a decent bounce in the lower term time frames on the daily off of this lower first area and this bit of a gap from the way up. So it has filled this gap. We'll have to see what this looks like on momentum. 34,516 is the pivot, and it's going to get an initial cross down here on the daily. What's the 2-day looking like? Now this is where, okay, so the 2-day is going to close with today's candle, and closing above 34,152 would be an initial cross up. Now an initial cross is not confirmation, so you need to see the next 2-day closure in order to get confirmation of a full shift in momentum. And in this case, that still leaves open the lows. So the lows are still well in play down by the lower second around that 30,000 or 34,000 to 34,100 area. And then if that is dropped, I do think it's probably headed for this low at around 33,700 area, maybe even 33,800 over here. And then we come back to it. And we'll follow up with what the weekly is going to look like as it comes into its close. Now, Dow has been a little bit weaker on its bounces versus NASDAQ, which did get a gap fill. And this is something that, again, that I mentioned is like, hey, what bulls in this market don't want to see is a gap fill and then right back down. Now, this isn't right back down. This is still above the basis. It's around the upper first. It's got room. It can actually run all the way back to around that 14,900 area. If it drops it and it takes out this low at 14,715, that's where it is eyes on, probably back to this low down here by the lower second at 14,500 to 600. And that would open up targets. So this high was tested over here. It would open up targets down to the mid to low $14,000 area. So 14,500 to 14,300 would be the next big area. Now, if it does put in a higher low here on the daily, you want to see it coming in above this lower first as it stands right now. That's at least got some room above that wick. So around that 14, in this case, 14,860 rather to 14,900. So if it can hold that, generally speaking, this is still an uptrend, and I'd be looking for another run, at least the local high or the breakdown of the local high at like 1530 to the high wick here at around 15,430 to 15,620. Right now, it is looking a little bit more angled down. Closures below 15,468, which it is trading below. We'll get an initial cross down on the daily. Now in traditional markets, I always like to check the 2-day. 14,811 is going to be the 2-day pivot. 3 days also got a cross to the upside. It isn't a particularly strong one just yet, but 14,822 is the number there to keep above, which would still indicate pressure to the upside. And you can see here on the 3-day, the lower first is the area to hold on the 3-day right there at that support at 14,900 or so. The 2-day, I believe, that is, we can see that it below there would be a test into that 14,900. Lower first is coming in at 15,000, and lower second is right here at the lows, basically around that 14,700 area. Now the basis is what you want to see hold close to close, and this is coming in at 15,311 currently, and that's going to be something to pay attention to coming into the close of this week on Friday. SPY, lower high than this guy up here, still maintaining an uptrend though. Nice bounce off the basis initially for 448. It's currently trading below, so it will get a cross down if it closes like this today. And but a bounce off the basis, no biggie. Can come all the way back to the lower first at 438. You don't want to see it losing this area, because then it's targeting the wick low to this close here at 436 down to the wick low at 435, which then brings into play the lower second at 434 to the actual low of this particular move at 433, right around that daily at 430 to 432. And that's going to be a big area to watch for if SPY does start to break down, especially coming into options expirations. And it's the biggest one, mainly because we're rolling into the last quarter of the year. So keep that in mind. 2-day, still going to be upside angled above 438. It's a little bit above there right now. That's going to close today as well, though. So I do suspect it's going to be right around 440. So you do want to see this hold up, and you don't want to see that. It would be an initial cross down if it closes below. Lower first is in play at 440 to 441. That's still above the momentum pivot. If it does get below there, I do think after this updates, that's going to be the area to look, is that lower first on the 2-day chart. The 3-day is 442, and that is going to close on Thursday. So we'll check on this on Friday. This is a bounce off the basis, still on the 3-day, this is a, still an uptrending structure. This would be a lower high, closing below this low here at 448, the low wick from the candle that put in the high right into that overhead resistance at 452 to 455. But it's not until it breaks down below this lower first and these wicks down here, kind of got a zone all the way down to 433 to 436. So if it starts to close below there, then we've got a significant trend shift on the 3-day where we have a basically a lower high, lower low structure, and then you're looking for that structure to complete with another lower low, lower high. So it would be a little bit of pain on the 3-day chart. 4-day is still going to be pressured down. This would be a lower high, but it's not a lower high until we see a close below 440. So 451's the pivot currently. I think I just messed up my microphone. No? Maybe not. Let's see. Did I mess up my microphone? No. All right, cool. It's got a touch bar on it, and I accidentally poked it a few times. All right, so, but right now, this is a strong uptrend. Seeing some consolidation is actually preferable. So I can't make too much of this right now. We'll come back to it on the longer term time frames coming into the weekend. So that's going to be traditional markets. And then Dixie. Dixie's the big one. Now you'll note that on Monday, when I talked about Dixie, I'd made note that it looks like if it doesn't pass this high, it could become a double top at 104.44. But if it pushes above, it's likely going to go test the 104.69 area. Nice. It did get a closure above, and now it has even back tested in this daily candle, taking out this high. So the next big area was going to be this little spike high up here at 105.10. It nearly hit that in today's candle at 105.02. But the area above there would be 105.26, and then the actual highs. And that's coming in at around 105.65 to 105.88 to 106 area. So I've been asked my opinion on this by quite a few people. Is like, oh, okay, do you think it's ready to cool down yet? And I'll tell you, just look at momentum. No, it's not. 103.89. Still reading off of this low back here, which was what at around like 103, but it's only, it's chasing. So we are seeing expansion again. Now, expansion has begun to cool down, and this is considered a bit of mean reversion back to that 103.57 area, but after it higher loaded its way out on the basis band, now it is true expansion to the upside. So this is the next logical area to come and hit. Is it getting close? Maybe. But Dixie does have a lot of outside factors right now. China is doing a bit of QE. I should say a lot of QE. So you do have some countries that are doing QE around the world. And when you see that, that is going to increase Dixie, right? They're basically devaluing their currency. Dixie we're still monetarily tight over here, relatively speaking. There is some bank programs that are basically providing like silent bailouts or liquidity, if you like. But in this case, generally because they're QEing now, you're going to see dominance go up in the dollar, which is reflected here on the dollar index chart. So the 2 days, the next thing to pay attention to. Now it is in a reversal area, and this has been quite a run from the low side of the bands to the high side of the bands. So it is getting close. It's just a matter of where does it put in a high and when. How long does it take for that high to get put in? And it could be this week, could be next week. I will caution you that 104.61 is the current pivot on the 2-day, and the 2-day is closing today. So 104.61 being the pivot here, when it's at 104.84 means that it's going to get across back to the upside. But it's close. It's very close. We're in the general vicinity where a high is probably going to be put in, but don't rule out crazy spikes to even 106 if it does get above the highs up here. So it took out the next high. If it takes out this high, which is, there's some traffic in this area, so it's likely to at least stall there or get an initial rejection, and then we come back to it later. But if it does start to push up and walk this upper second standard deviation up over the next couple of closures, then I'd be favoring probably a high put in, probably right around options. And it's going to go one of two ways. Either around options expiration, going to see a high put in, or it's going to really leg up and break resistance. Those are the two options. It's either going to put a high in very soon, or it's going to leg up. And that is what you got to watch for, as that will have effects market-wide. In this case, this is also the upper second on the 3-day. Basically poked right into it, retesting it right now. Now the 3 days pivoted at 104.63, so we've got the 2-day at 104.61, the 3 days at 104.63. This isn't going to close until Monday's candle. So we've got today's closure. No, will this close Thursday, Friday, I guess? I guess it would close Friday, huh? Yeah, this will close Friday. So we'll actually check on this on Friday. That momentum pivot hasn't even gotten an initial cross down. 4-day is 102.78. The area's been back tested a bit. 5-day is 102.05. And then weekly is probably pretty relevant, still at 102.05. Now, the big difference here is where the upper second is. And the weekly upper second is very likely to get tested. If it does not, put in a high, deviate this high over here on the daily, and then head back down, then it's more likely that it's going to head up a little bit further. And that is supported by the way traditional markets are looking as well. So we'll follow up with that on Friday. Where would the area to be watching out for now is today's low at 104.59. That would also be below the higher term time frame pivots, and then we come back to it. So that would likely begin to look like it's going to try to set a high. And then we start targeting around the upper first, around 104.22, this little order block area at 104, and then down to the basis and that support at 103.57, and just walk it right back down, at least in terms of targets. Let's look at gold. Gold violated the momentum pivots that I was talking about on some of the higher term time frames as well as the daily. After putting in this high, it needed to hold this 1932 or 1932 area. It is headed right back to the basis. It is fine as long as it is closing candles above 1903. Starts closing candles below 1903. Well, you can see it's a bit of a range. Then it's going to be right down to the lower first at 1897. Into this support here at 1893 or so, and then right back to the lows, possibly lower. Those lows, again, are coming in around 1885, lower seconds at 1880. Now, if it does put in a low here, it's got to get above today's wick high to set a low at around 1930. That was the important pivot area that we talked about. The momentum pivot is facing down below 1947 currently on the daily. 2-day, this is a swing of the basis band. 1903 still the momentum pivot. That is going to creep up. And dangerously close after this high to just retracing right back to this order block and lower first area. So if it does drop 1915 or so, I would be looking to the lower first around that 1908 to that wick low around 1903. Below there, I'd be favoring a run right back to the lows around the lower second, around that 1880 to 1885 area. If it does regain the basis at 1934, it'll start looking a little different. Still got plenty of work to do because this is ugly. This is lower low, lower high on the 2-day, so very, very ugly. Momentum could potentially turn as well if we do see it drop a little bit further here. 3 days still going to be up above 1890. 4-day is showing limited downside for now, with that lower second coming in at 1893. The 3-day in comparison is just below there. So it is a downtrend range, basically. And rejecting off of the upper first is not what you want to see. That is the downtrend support in this case, because it is a downtrend. You're putting in lower highs at that upper first, which then you look for a trend change that can hold that lower second and the prior low and then begin to shift trend. So at this point, I'm not seeing the signs of that. But you know, it could get there. It's kind of got a little bit of a meme trend line going on here. So, you know, there could be nope, it's not good enough for me. I mean, you could take it from this last one, but in terms of the totality, you could make an argument for it. I don't think there is. Basically, you're looking for a higher low trend change, takes out the last local high at that 1955 region. 4 days going to be pressure down still at 1915. It's still turned to the downside. 1915 would cross it back to the upside. That's closing Thursday, Friday's candle as well. 5-day above 1915 closes on Friday. That would turn it back to the upside. And that's because the 5-day is already in a downtrend. So you've got the low, lower high, lower low. If this starts to drop this low right now, that would be your lower high trend continuation to the downside. As it stands right now, it's still got a chance on this major support down here. If you see it dropping around 1900, then it's probably going to leg down significantly lower if it closes there on the higher term time frames. So, of course, the weekly is going to close the same time, and it should be the same look, and it is. Lower second there, which was already tested, got a nice bounce. That's at 1880 to 1885 area, depending on how price is moving. All right, that's going to do it for today's analysis. Was there any questions regarding this, the swing fail, volume-based swing fail pattern stuff? I'll start with that. If you have any questions regarding that, let me know in the different chats here, and I'll be happy to answer what I can. And other than that, I'll take some requests here, just a few before going. So let me know if you have any questions about the swing fail pattern areas, how it's determined, and what to look for. And then if you don't have questions for that, go ahead and put in a request if you have any. Yeah, for you guys in the other chat that aren't in YouTube, if it's really specific to the business, hit me up personally, and I will try to help you. But if anybody in the YouTube chat has any questions regarding the swing fail pattern setup for volume-based swing fails, go ahead and hit me up. And if you have any requests, go ahead and put them in the chat there. Jimmy says you guys are doing volume-based swing fail patterns. Yeah. Uh-huh. I think Rick teaches this as well over there. Okay. So it doesn't look like I have too many questions that aren't super hyper specific to contract work right now, which I can't discuss. Yeah, and so just to kind of call this out, Bitcoin trying for a bit of a trend shift here on the 15-minute. I would keep an eye on the hourly. Momentum pivot is going to be at 25,523. And we did see a higher high on a close. This high came in at 25,846. The last high is at 25,834. And it is a slightly higher high close, but because it did not close above this little spike high wick, and in particular this 25,866 swing fail area where there is a close on the 15-minute here, for instance. So 15-minute has a close here that bounced and regained that high volume wick low. Then, there's not much doing until it regains that area. So basically the way that I'd even showed this in prior to this move down, I had posted in a private chat with a friend of mine here. If I can find it. I had posted this. Nope, that's not what I posted. I posted this. And this was a pretty easy setup, right? So let's see if I can get this over here. I posted this. There was a nice high volume low set right around the swing fails here. And it bounced up to right around that other wick low swing, high volume swing fail wick low at around that 25,650 to 660 area. And then I had mentioned if this wick low of this higher volume candle gets dropped, it's going to drop down to the next area, which is your 25,371 to 25,3 area. And of course, if that's lost, then there's a bigger zone below. And in this case, we can see that that played out. That was on the 15-minute. That was this wick right here. So if we zoom in a little bit here, we can get that. So you can see the volume bars. So that was this wick right here. And it bounced up. And then when it lost this area, the next big zone to go down and fill was this wick low zone. And that is the candle close low on the 15-minute to the wick low. Dipped in there and then shot right back to the top side. And then the close and wick here, which is this close and this wick here, offered up a pretty brutal rejection. Now, these were very high volume candles relative. So if you were to aggregate these two areas in terms of volume, you're going to get this nice high volume candle. And this was a nice wipeout right there at around 26K. Also, big level. It's a weekly. So 26K weekly, boom, hit, and then trades right back down to the lower first on the daily. Sir, you're in that chat. And a little bit of news. I am in the process of getting a few things settled with a Discord that will be publicly available for everyone to hang out in. So that is coming soon. I do look, yeah, Lindy OnlyFans. Yeah, no. I mean, I could maybe do TA OnlyFans. I'm sure that no one would subscribe. All you're going to get is TA. I'll just advertise it as TA. Everybody will check it out and then realize it's just charts. Okay. Bobby asks if support resistance on higher time frames, let's say from the daily, do coincide with a lot of the low time frame SFP areas. Do you agree with that? Well, I mean, it should, but if you should be using the volume-based SFPs. If you're going to use them on the time frame that you are charting. So if it's a 15-minute, I'm looking at the 15-minute chart. That's where it's utilized. Now you can also go to the lower term time frames than that time frame to use them as well. So if you're going to pick out high volume swing fail areas on the daily for either a swing fail or continuation, then I would be, marking out the higher volume candles, right? So we saw that this wick low was taken out of a higher volume candle. The wick high, if it's taken out on the daily, that wick high is going to be marked. That wick high is also marked on the 15-minute. So when you go to the lower term time frames, you'll see it, but you will need to adjust on a candle by candle basis the lower time frame you go, right? The prior highest volume candle low is right here at the 25.2. If we see the daily break below there, the price is going to move down, right? And then if we see that on the 15-minute, if we go to the 15-minute here and we look back there to that low, that is the highest volume that we have seen since the rejected high. So that's the highest volume low that we've had, is at 25.2. What is it? 234. Caught it right at the end there. So, I mean, that is the highest volume spike on the lows. And then the highest volume spike on the highs is that 28,200 area. Now we've seen a rejected high that has come in and beat out the local range in terms of the single candle rejection. But that's also a bit of a liquidity fueled event from open interest here, because open interest was building up and up and up as Bitcoin was trending down. So one of two things was going to happen. So they're going to wipe out those late shorts and that were shorting it, on a breakdown, for instance, as it's like, oh, it's a lower high, we're going to short it to the breakdown. It swings to lows over here and just rockets right back in their face. So, it swung these lows, didn't close below. And OI was building up on those lower highs. And then it comes down, boom, big green candle, wipes out that open interest. And now we see that open interest is now below trend. So a bit of a trend break on open interest, probably going to go sideways. If we see a really big drawdown, down to 7.42, it's probably going to be somewhere around these lows again. And then come back to it later. So that was a liquidity hunt, and it was going to go one of two ways. It was either longs were going to get blasted off down below this wick low, and get liquidated and cause a bit of a move down to the wick low area and lower, or shorts were going to get taken out trying to short a potential breakout to the downside, or breakdown, breakout to the downside, otherwise known as a breakdown. So, but in this case, you'll see that because we already have a close open right on this, these two, this close open structure. There's already a prior close open that was high volume. So there's no sense of me marking that. I could throw another horizontal down here, but in this case, because it is shorter term, I'm just going to use a teal line, and then I can alert it. Because if we do see closures back above this very high volume candle, guess what? It's going to go, Bitcoin's going to go hunt for liquidity above it, probably right into the next historical highest volume area at 26,100 to, 26,200 to 300 area. And if it breaks above there, well, it's got a chance. Lower volume moves up. The last highest volume area, is going to be right around this candle just above it, and the mid $26,000 area. And then above that at the weekly at around 26,700. 50 or so, right there where the weekly breakdown is. And then we come back to it later because it's likely going to start hitting these higher volume areas up here at around $27,000. It's pretty simple. Now, the reason why I think volume-based swing fails are far more valuable to your trading setup is because it's all based on the order book. So for those of you that know and have been around a while, I'm big on order flow and what's in the order book. And this is going to be how you can read order flow without having to have a subscription to one of those order flow platforms. You don't necessarily need to see the delta and all that other stuff to understand order flow. This is literally order flow right in front of you using PA to determine order flow. You're just doing the reverse. So instead of having a chart that's showing you order flow coming in, and where there are, what the delta between the bid and ask is and like all this other stuff, you don't necessarily need it. You need areas of importance. You need to see the volume either come in or not. If a higher volume area breaks down, whether it's to the upside or the downside, price is going to move past it until it finds the next highest volume area. So that's just how order books work. You don't necessarily need to know the nitty gritty to understand that. This may not make any sense, but I use longer term time frame SF as trend to trade in the direction short term time frame fails. Range trade seems to work. Maybe I just feel safer. The longer term time frames are going to be determined by candles like these. High volume rejection is going to show higher volume on those longer term time frames. Is it going to be as high volume as another area? Not necessarily. I mean, when you look at the 4 hour here, you can see that, the highest volume 4 hour candle on the low is the actual low. So you move past it, but we already can determine that on the 15 minute. We already determined that. You can go and you can pick these out on the higher term time frames, but you better refine it on the lower term time frames, especially if you're going to range trade. If you're taking scalps within a range, swing fails. Well, as swing fails, a longer term time frame swing fail, how are you determining that? I mean, the swing fail was right here on this low. And we can determine the full swing fail of that low, for instance, by looking at it, right? When we go over here to this swing fail, we can see that the actual close open was here at 26,522. What? That's not. Oh yeah, because that's the green candle. Ha ha ha. 25,315 with the low at 25,234. That is the swing to the downside. That's the fail. Now you can go and you can refine that on the hourly, and you can see that the close up here, and it did hunt lower, but you're looking for swing fail zones. You're projecting swing fail zones with this. So this is a projection of swing fail zones, not the actual swing fail, because the actual swing fail was right here, and it came later. But if you had these other areas marked, you would know prior based on the volume that came in over here, right? So you can say, okay, the volume that came in on this candle low, which is also going to be the low on the 15 minute, right? When this came in on this candle low, this was higher volume than we had seen, or the highest volume we had seen since the actual low to that point, so it gets marked. Now look at the 15-minute candles leading up. So we've got a higher volume candle low here. So when this area is lost, if it is lost, what are we looking for? Well, we're looking for closures that get below and then either fail, swing fail to the upside here, and then close back below. And then we're looking to the next area because closures below are what matters. Closes below show that you can breach through that area. So that makes it more interesting. Doesn't mean that it's not just a deviation, because it did, reclaim it and head back up, but it was just another lower high and it lost it again. Lower high, boom, down, and it hits this big liquid area below this candle here. So we have the real SFP area right here. And it just so happens that this lines up with the area where you saw the actual swing fail, because where's the actual swing fail? The actual swing fail happened on these 2 hourly candles here, right? So this is your swing fail, and it wasn't confirmed until this candle up here, which is a reclaim of this low anyway. So that was your candle right here at 1600 on the 22nd. It even came back down and retested this low right here. So I hope that helps you understand that what we're doing when we're tracking continuation and swing fail areas is not tracking the SFP itself. It's projecting the areas of interest based on high volume. That's what an SFP itself is, just a swing fail. And it's when a low is set. This is a swing fail. Low is set on this candle right here. That was your swing fail pattern, right? It marched up. So this was your SFP of this current range. But, that doesn't mean anything right now when we're trying to gauge price action in between. So what we're talking about here is volume-based swing fail patterns. And volume-based swing fail patterns are projections based on the highest volume areas that set interesting areas of price action. So we saw the green candle, high volume here. This set a bit of a low on the wick, but it just curled right over. There's no swing fail here. And then we see the wick below, nice high volume, closed inside of this wick. And then we're searching for a swing fail by doing this. But then on the other side, when you do see the swing fail on the low, all of this is higher volume resistance overhead, because it's, the way down. It's just the opposite on the way up. All the higher volume on the way up should act as support on the way down. And when you lose it, and you start to fall further to the next big area of interest. And this is just, excuse me. This is just a way to, so don't confuse swing fail patterns with volume-based swing fail patterns, because you're doing a different task. You can identify the swing fail pattern. It's the low. But in that case, what are you doing if you're trying to scalp or position around it or play the range for consolidation? You want to have a volume-based swing fail pattern chart. Does that make sense? I hope that makes sense. You guys can let me know if that made sense or not in the chat over there. The guys in the other chat says that makes complete sense. Well, that's because that's how it works. And basically, we are deconstructing the order book. You don't need the order book chart and the delta and volume on a particular exchange to understand this concept. And the main reason why I think this is valuable to do on spot price as well is if you're doing this on spot price, you're not going to get an order book. There's no order book platforms. There's no flow platforms. There's an order book and order flow platforms for spot price. So this is something that you need to understand. Now, in traditional markets, for the ordering platforms for something like a Bitcoin gold ETF, Bitcoin gold is not a thing anymore, really. A gold ETF even. I'm thinking Bitcoin ETFs because they're going to be here someday. But like a gold ETF, you can see the books. So, but you can only see a portion of the books, and you're not seeing the options side of the equation. So you can see the order books in your traditional dash or terminal if you're using a terminal over there, or your broker. You're going to see the order books, but you're not going to see the depth from the option side of the market. So you have a big unknown. So you have to rely on understanding where the high volume candles are, not just in a profile view, because a profile view is just going to show you the aggregate highest prices traded in different areas. And they might line up with some of the areas that you've identified, and they might not. This can be tracked specifically candle to candle, whereas like volume profiles are only going to they're only going to get you the interest within the candles, where this is candle to candle support resistance. And horizontal support and resistance, look, your basics of technical analysis are trend, support and resistance, volatility, and that all creates momentum. Okay, that's it. Those are the four main pillars of trading. And you can complicate it as much as you want, but that's the four main rules, right? You got your trend. Trend is your friend until the end of the trend. And when the trend is unclear, you're probably in fear. And you've got support and resistance areas, or historical areas that people bought and sold, that make for major swing fails. That's where swing fail patterns come into play. That is your reversals in many cases, or, whether it's a short-term or long-term downtrend or uptrend, you're going to see swing fail patterns are what define those areas, right? And then you've got volatility, and all three of those things determine your momentum in a particular direction, up or down, or in some cases, even sideways. I mean, throw on a line chart on Bitcoin. Not much has happened. Oh yeah, you like that one? That's a Landy original, by the way. When the trend is unclear, you're probably in fear. That's an OG Landy saying right there. So all right. So yeah, I mean, if you want my personal take on where I think Bitcoin's going, until it breaks down below 25,300 or above, at minimum 26,232, it's going sideways. So 26,232 is going to be your big area to the upside. If you see that starting to break, it's probably 26,500, 26,750 is on the table. Maybe 26,400 to 5 if you want to take the daily close open high of this particular range. And then the next higher high would be the 27,500. But until we see 26,232 taken out, not really looking for more to the upside. And until we see that wick low at 25,307 of this current range. And even then, like I said, there is that actual wick low of this particular move is at 25,236. That's the next area I'd look. And if that's broken down, then we got the big area below at 25, basically 200 all the way down to that 24,750. Break below that, and you can ride the roller coaster down, I would assume, in the higher term timeframes at least. So all right. If there's no more questions, what I will ask is that if you're watching the Bitcoin in 60 seconds videos, of course, later today I'll have one. Go ahead and like the video, comment if you can. That really does help out the video's reach, as it does the algorithm bases your showing that video based on your watch history on YouTube, as well as if you like or comment or engage with the content. If you like this video, go ahead and leave a like on it. And go ahead and give me some feedback and suggestions on Twitter or x.com if you do have any feedback to give, or if you have any questions, ask them there. Until I get this Discord up and running, I will be basically answering questions on Twitter publicly. I've been getting way too many DMs to keep up with. So, and in many cases, you're probably not the only one that has that question. So if you ask me a question publicly on X or Twitter, then I can answer it there and illustrate it for others as well. And yeah, that's going to be it. Well, I'll have some news regarding the a potential public Discord coming up here very, very soon as well. We'll see if we'll talk about it on Friday or not. But it's going to be sooner than later. With all of that said, I do want to thank you all for hanging out with me today. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, and above all, stay safe. And with all of that being said, we're going to kick on the music here. Let's go ahead and go over to Streamlabs here, and I will bid you adieu. Let's go ahead. All right, guys. You take care. Have a great one. Thanks for hanging out. Landy out.